Hey everyone, welcome back to Corporate Decoder. Today we're diving into Figma's S-1 filing their registration statement to become a public company. And trust me, this one's got more plot twist than a design collaboration gone wrong. Get ready for some seriously smooth financial maneuvering. The big takeaway is that Figma, the design software powerhouse, is finally going public. It means things got so bad, they're making software that turns prompts into prototypes just to keep up with the new AI world. Let's get to the numbers, but remember, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can chat with other business intrigued people. The report officially filed with the SEC on July 1st, 2025, lays out all the details a potential investor needs to know. It's basically Figma airing out its dirty laundry, but the clean kind because the company needs to be transparent. Let's start with the financials, the part everyone cares about. First takeaway for 2024, we're looking at almost $750 million in revenue, a drop from about $500 million the year before. Not bad at 48% year-over-year growth. We can also see that for the first 3 months of 2025, revenue hit $28 million, up 46% from the same period last year. This document states that their 4-year compounded growth rate is about 53%. So it's looking good so far in revenue, $28 million. Up 46% from the same period last year. This document states that their 4-year compounded growth rate is about 53%, so it's looking good so far in revenue. But as always with these things, you have to look deeper. Let's look at operating margin. That's how much profit Figma makes from basic operations before taking interest, taxes, or one-offs into account. Here is where it gets interesting in 2024. Figma had an operating margin of negative 117%. That looks terrible, but it's also a bit misleading. It was heavily impacted by stock-based compensation and one-time events. If you account for those events, it would be closer to just 17%, which is pretty nice. But it's a warning sign when a company is reporting one number, but the real number looks very different. It forces investors to ask what is really going on. One key metric that Figma highlights is its net dollar retention rate. A net dollar retention rate shows a company's ability to retain customers and grow their spending over 134% for 2024 and is slightly lower at 32% as of March 31, 2025, a rate over 102% as of March 31, 2025, a rate over 10 takeover end of March 31, 2025. A rate over 10.2% as of March 31, 2025, a rate over 10.2% as of March 31, 2025, a rate over 10.2% as of March 31, 24, and is slightly lower at 100% is a good sign, because it shows that they're expanding with existing customers more than they're losing from those leaving. Looking at income, you see a net loss of $732, $1 million, 713 T, $7 at Harvard, $3B7 and $737 mean it looks pretty good so far, but it's hard to tell. With the number, what was stated earlier, much of that negative amount comes from one-time events and internal releases of restricted assets to investors who are getting anxious from a potential acquisition gone wrong. The short story of everything we just mentioned is that it looks pretty good so far, but it's hard to tell with the numbers being obfuscated like this. This is classic move before taking a company public to make it look better. The bottom line is, while it's unclear now from looking at these numbers from a high level, Figma is growing and is definitely a powerful company. Now into the risk factors section. Every company is required to disclose the risks of investing. Figma has been growing like crazy and calls out that this kind of growth cannot be maintained. In addition, just dealing with rapid growth can be a nightmare and hurt business operations if it's too difficult to control. Here's another risk. As more AI is used, will Figma still be as useful as it is now? Will AI replace the functions? They mentioned that this might mean losing customers, which would lead to loss of revenue. In response to this AI, the company might need to change even more on how to bill and package things. Figma's success isn't guaranteed since the market for their services is very competitive. It has a lot of competitors, some with way more money, experience, and brand recognition. These competitors might be able to develop better products, offer lower prices, or even bundle their services in attractive ways. If that's the outcome, Figma could lose customers and market share and ultimately have its financial performance adversely affected. A major risk to all software is security and privacy. There can be hacks and breaches. They also rely on third-party service providers, and those can also be vulnerable. There's a risk of losing data, having services interrupted, getting sued, or experiencing regulatory problems, all of which would hurt Figma's financials and reputation. Figma has been known to expand its business through acquisitions, but acquisitions are risky and can result in financial loss if not executed carefully. If Figma cannot pull off any one of the above carefully, acquisitions, strategic investments, partnerships, or alliances, then management can get distracted. It could create a business disruption and dilute value for existing investors. It is also possible that regulatory agencies do not approve of those actions. You have to remember that was the deal with the previous Adobe acquisition where it fell through, which as an investor you could see that a failure of being able to make deals in the future could mean damage to business. Should acquisitions, strategic investments, partnerships, or alliances, then management can get distracted. It could create a business disruption and dilute value for existing investors. It is also possible that regulatory agencies do not approve of those actions. You have to remember that was the deal with the previous Adobe acquisition where it fell through, which as an investor you could see that because there is a global market, they have to be concerned with a lot of international laws. Things like tariffs, privacy, trade secrets, and security risks will be a factor in their business. Code to product innovation